All right, guys, so we're going to start the charts off with Bitcoin, then we'll go to some altcoins. We'll cover everything pretty much that I covered in my last video update. So this includes Ethereum, CRV, HBAR, XRP, and I believe a couple of others. And then at the end of that, after that's complete, at the end of this video, I'm going to set aside 10 minutes to cover 10 coins that you guys voted for me to cover. I ran a poll on my Twitter, and I basically said that whichever coins get the most votes over the next 48 hours, I'd cover at the end of my next YouTube video, with the goal of covering 10 random coins that you guys chose in under 10 minutes. So the goal with that is going to be to kind of rapid fire 10 charts, the ones that were selected with the most votes, at the end of this video before we end it. So stay tuned for that if you want to take a look at how I approach random coins that I don't typically talk about. Guys, before we jump into the charts, I have a couple of quick announcements. I'm going to tell you guys about the upcoming giveaway that I'm going to be doing. It's going to be announced officially. I know I've been talking about it for the last few YouTube videos. It's going to be officially launched before April 1st. And this is going to be the largest giveaway that I've ever done. We're going to be giving away $15,000 in cash. We're going to be giving away 2 MacBook Pros, 2 MacBook Airs. We're going to be giving away an iPhone and a number of other prizes from myself and from my exchange partners and sponsors. So keep an eye out for that. When I do announce it, it will be my pin post on my Twitter. And again, it will be announced before April 1st. You guys don't want to miss it. Second thing, guys, quick shout out to my partners at WooX who help make this content possible. I've talked about WooX in the past. It is one of my exchange partners, and I also want to highlight WooFi today. WooFi is essentially WooX's decentralized perp exchange, which allows you to trade without having to give your crypto to a centralized entity. So WooFi is a good option for those who want to trade perps and crypto while keeping control of their own assets. You can trade using WooFi through a online wallet such as MetaMask or Rabby, which are my 2 favorite online wallets, but you can then connect those to WooFi and trade while holding on to your assets. There's always differences between centralized exchanges like Bybit, like Woo, and decentralized exchanges like WooFi Pro, with the biggest difference being that with centralized exchanges, you have to actually send your assets to another entity to hold them for you while you trade, whereas with the decentralized exchange like WooFi Pro, you can actually control those assets yourselves. However, there's also some trade-offs in that centralized exchanges typically have the best liquidity. Currently, decentralized exchanges, or DEXs as we call them, like WooFi Pro, don't necessarily have as good liquidity as a centralized exchange. So you're trading off the liquidity aspect to be able to custody your own assets when trading. But guys, if you are lower volume traders or kind of new to trading, then decentralized exchanges may be a good option for you because the liquidity should not be as big of an issue as it may be for a higher volume trader. So I do recommend you guys check out WooFi Pro if you do want to try using a decentralized exchange out. Keep in mind, again, the giveaway will be announced before April 1st. That's our announcements out of the way, guys. Let's go ahead and jump into the content. Well, let's go ahead and jump right into Bitcoin first, guys. Starting off from some of my recent Twitter posts, have been talking about key levels over the last couple of weeks or so when Bitcoin had dropped down to mid 70Ks earlier in the week. And I basically said, now that we've seen this drop down, we have local supply here and we have high time frame demand, and that these 2 levels are essentially the most important levels on the entire chart. Local supply being the level that's kind of capping our upside in case we're headed lower, and high time frame demand being the level that I expect to cap our downside in case we do head lower. So I basically said that until we get above local supply, high time frame demand is on the table, but ultimately I do think that we're forming a bottom or a base between these 2 levels before the continuation of the upside. And you can see here that following that, we actually went up and tested local supply and rejected from it as expected, and we've been chopping around in there since. If we go to the chart today, we can see that we actually continued now down to the local range lows and are now approaching high time frame demand. So thus far, we're pretty much doing what was expected, chopping between these 2 key areas of interest. And again, I do think that we are forming a bottom here between these 2 levels. So right now, what I've just been looking for is kind of evidence of a potential bottoming structure to form here. And guys, before we go any further, I want to highlight a small short clip from a YouTube video that I made about a month ago. If we go to my YouTube channel, you can actually see this one right here called the mini market update, is the Bitcoin cycle top in? That was about a month ago. In this particular video, I covered Bitcoin on the higher time frames. And so I just want to play a quick 30-second clip from that video, and then we'll continue on with the analysis today. It doesn't mean that the correction is yet over, and we could certainly go lower. And to be very clear, because the origin of this potential leg to the upside was down here at 58K, if this really is the start of the final leg of this bull cycle to the upside, then technically our invalidation is down here at 58K. That means that we could move down into the 80Ks, into even the 70Ks,
and it wouldn't invalidate or break this higher time frame structure. Okay, and that's a key thing that you guys have to understand. With that being said, the strongest area of support on this chart in terms of the macro or the higher time frame is still going to be this 72K level that we had marked off earlier in prior videos. This is kind of the most significant area of support, 65 to 72K on this macro high time frame chart. And so if we were to bleed down, either we expect to bounce before this zone is met, or if this zone is tagged, we would expect us to hold here if we are really bullish here, and the final leg to the upside has begun.
All right, guys, so that was the clip from the video, and you can see here that I've once again highlighted that key area that I referred to in the video from 66 to about 72K, or 74K, I should say. And guys, keep in mind that that video was about a month ago, but that level, this specific level, I've been talking about for not just a month now, but probably 2 to 3 months. It has always been, before we even started this drop to the downside, a very significant level on the higher time frames, and the most logical place to expect a full-on reversal if we were to tag it. So again, keep in mind, the fact that I'm saying it's okay that we're heading toward this level is not something that I'm saying now because we're starting to fall. It's something that I've been saying for literally months. So again, the point of this is to say that do not panic at the most likely place for a reversal as we approach this region. Obviously, sentiment on Twitter, as I've seen lately, is pretty crazy. It's pretty bad, the worst I've seen it in a while. And the general consensus seems to be that the top is in, that the cycle is over, and that we're headed down to 50, 60K, etc. Again, keep in mind that we had this level outlined back here when you were trading at 98K, at a time when many were saying that we were headed to 110, 120, 130K. And again, as you saw in that video clip, I said that this correction has not shown any signs of being over yet, and we could certainly fall lower, and that if we do fall lower or move down to high time frame demand, is not necessarily anything to be concerned about. So keep that in mind. People are panicking here, and a lot of these alts that we're going to cover later in this video are essentially approaching levels where risk to reward is absolutely in favor of buying, and selling, in my opinion, is the worst thing you could probably do on this drop for those alts. But a lot of people are getting panicked, are getting afraid with the drop here. Not financial advice, of course, but I don't want people to be making silly decisions based on emotion when these are scenarios that we laid out months in advance before this drop even began. So in any case, guys, I've had people ask me on Twitter for the last 3 or 4 days or so, are you still bullish? You know, like, how can you still be bullish when we're falling? We're down to sub at 70K. How are you still bullish? And it's like, this is the same exact move that I've been talking about for months. Why would I not be bullish if we're simply getting what I said was likely to happen or was a very real possibility? It makes no sense to become bearish just because that very real possibility is now literally playing out. In fact, as I'll show you guys in the coming minutes in this video, a lot of our alts are hitting the targets that we talked about in the last video update. And so this is pretty much exactly what we thought was going to happen. And it's really nothing to be panicking about. Losing certain levels can cause some panic, and we'll talk about that as well. But right now, when all things are considered, this is very well in the realm of normal in terms of what we were expecting here. So let's go ahead and continue with Bitcoin, guys. We have now wicked below these local lows that we put in here on the 28th of February. We're seeing a little bit of a reaction here. And again, I've marked off this green line for a reason, and that is that we have this little cluster. I can go on the daily and show you guys. We have this little cluster of demand here, or you can see like a little cluster of consolidation prior to the aggressive move up in these 2 daily candles. So this is an even more significant area of high time frame demand. We have a lower time frame area of demand right here between 74 to 77. And that's where we've bounced off thus far, right? Now, again, we could front run high time frame demand, or we could test it. So I'm not saying that the bottom is necessarily in yet, but again, remember, test of high time frame demand is the most likely place on this entire chart, in this entire area between 50K to 100K. This region here between 67 to 74 is the most likely place to see a reversal within this $50,000 region, okay? This zone right here. So the fact that we're approaching it just means that this is the place where we'd expect bulls to step in, and this is the last place you want to be getting overly bearish at. So that's Bitcoin. Again, we're looking for some sort of a base to form here, so we don't quite have that yet. We have repeated lower lows and lower highs. We're looking for some sort of a bottoming structure to form here, some sort of a shift in market structure for a potential reversal to the upside, and that gets confirmed once we clear this local supply here, okay? And most importantly is seeing an impulsive move to the upside, okay? And yes, sometimes they can be tricky to spot or identify, as we very well know, but a lot of times we can identify them. We successfully have identified them. So we're looking for, again, impulsive movement to the upside, ideally breaking local supply, and that is our indication that we've started the next leg to the upside. In prior videos, this was probably 2 to 3 months ago, I talked about a scenario where Bitcoin could chop and basically form like a larger consolidating structure here between this high time frame demand zone, which we may soon test, and the local highs. And that was, again, the idea that we may be forming something like this, okay, before what would then be continuation. And that is still possible. And the way that we identify if this is more likely to occur is if the move off of this low, if we do bounce here, the move off, if it's corrective, meaning if it's very choppy and grindy and we're not getting strong momentum, then it's more likely we're still consolidating here for a large consolidating structure before the actual impulsive, or should I say trending move begins. In any case, that is something that we can talk about in further videos, because right now we're focused on this area here on high time frame demand. For Bitcoin, not really much else to say, guys. As I previously said in Twitter posts, I expect that we're forming a bottom between the high time frame demand here and local supply here. Thus far, local supply has done its job. It's capped price to the upside as we'd expect. Now let's see if high time frame demand will do its job and hold price here on the downside. And then ideally we can see some nice consolidation here before continuation to the upside. So that is it on Bitcoin, guys. Now with the alts that I'm going to be talking about here moving forward, keep in mind the context of Bitcoin potentially approaching a high time frame bottom here in the 65 to 73K region. And the reason this context is important is because if we are going to be indeed bottoming here, then Bitcoin doesn't have much further to fall. And if Bitcoin bounces hard, alts are going to bounce hard as well. So again, assuming that we are going to bottom in high time frame demand, we're likely quite close to bottoms on most of our alts. And with that context, we're going to approach the alt charts here in a minute. What that also means is that if high time frame demand is lost and we go below, then alts are going to get hit as well, of course. Now, there's a little bit of a caveat here, and I've had people ask me about this recently. I posted a chart on Solana on Twitter, and I said basically Solana has some more room to fall because of the chart, the way the chart looks. And someone then commented, if Solana is going to fall this much, wouldn't CRV fall just as much? And this is really important. We'll touch on this a little bit later in the video as well, but in the context of something like this where Bitcoin completely breaks down, there are a lot of coins like CRV that are quite beaten down, right? That are down 90+% from their highs, that are in the process of forming a bottom, as we've talked about in prior videos. And these coins, a lot of them are now sitting on high time frame support, okay? Versus other coins like Solana, or in this case, Bitcoin, that, well, Bitcoin is approaching high time frame demand, but let's say Bitcoin loses this level. If Bitcoin loses high time frame demand here, then the next major area of support is actually going to be way down here at like 50K, okay? Now, I don't think this is going to come into play, but the point is that there's certain charts like Solana, like not quite Bitcoin, but like Solana, and for the sake of this argument and to explain it, I'm going to say Bitcoin, that if they lose high time frame demand, they may have quite a bit of room to fall. You can see here Bitcoin from high time frame demand to the next area of major support is a 36% drop, okay? Not all coins are in that situation. A coin like CRV that's sitting on high time frame monthly demand already, again, for context, this is a 4-hourly level. We can zoom out to the higher time frames and you can actually see it's a daily level there, but here you go. I'd say this is like a weekly candle, one weekly candle. I consider this a weekly level. So the higher time frame that we can identify these levels on, the more significant they are. You can see on the monthly, it kind of blends in here. So let's go back to the 3 weekly, 6 weekly still kind of blends in, 3 weekly still kind of blends in, but 2 weekly is probably the best. You're looking for a single candle ideally to identify the single candle prior to the big move to the upside. There's no rules to this, guys. The idea is we're trying to identify areas of consolidation for expansion. So we got a nice clean candle here before this expansion. So I'm considering this, like you can say it's a 2 weekly level of demand, right? So coins like CRE that are sitting at monthly demand after a 90% drawdown, they don't really have much more room to fall. And literally CRV does it from a high of $6 down to what it's at today at around 30 cents. Where can it go besides zero if the coin absolutely dies, right? You're looking at 30 cents of downside relative to the upside. I'm getting off on a little tangent here. We'll go back to this when I cover the CRV section, guys. But the point is that Bitcoin is approaching high time frame demand. This is the most likely place to expect a bottom to form and a reversal back to the upside. This is the least logical place to be getting bearish as we approach high time frame demand. The time to get bearish, if anything, was here at local supply, which we did. We urged caution and said that until we're above this, we're not bullish. And it was the right call because we've now fallen $20,000 lower. But this is the wrong time to be turning bearish as we approach high time frame demand, right? So keep that in mind. Let's now go ahead and move on to our altcoins. We're going to start off with little reviews of these altcoins that we talked about in the last video to kind of get people that didn't watch that went up to speed. Very brief little clips from the prior video. And then we'll go ahead and look at today's price action, what has developed since that last video, and cover what I think is going to happen going forward. All right, guys, so we're going to play a quick clip on Ethereum. This is from my last YouTube video, the most recent one that I made prior to this one. This video was released about a month ago and I talked about Ethereum. We're going to play a small clip from there. Then we're going to take a look at how PA has developed since then, and then we'll cover my expectations moving forward. So here is Ethereum from the last YouTube video that I recorded prior to this one. That would just look like us revisiting this wick. Again, it would look something like this, rejecting at local point of supply, revisiting this area here, forming a nice base, and then impulsing to the upside. Okay, so in the grand scheme of things, it doesn't amount to much in terms of downside, but it does mean that we may sweep these lows. So typically on a move like this, you get a lot of people that then FOMO into the coins that bounce, thinking that that must have been the bottom. They FOMO in, they buy when we haven't yet actually reclaimed even the most basic level of resistance. And then they place their stop losses at the low because the low must be in. And then what happens is we come up, we reject, and we take their stop losses, and then we get the reversal. So that is kind of what I see as very reasonable to happen here. A lot of people saying there's no way we revisit those lows. I'm getting the comments all the time on my Twitter, like, oh, you're sidelined, you missed the bottom, there's no way we're going back. And it's like, we haven't even broken the first area of resistance, right? Which is our point of breakdown. All right, guys, so that was the last clip on Ethereum from my last video, and basically talked about how we had put in this wick low, and I expected that we would revisit these lows and clear up these lows into this high time frame area of demand, which is in green, and then look for the reversal. So we've now done that. We've taken those lows as expected. We actually were so weak that we couldn't even get to local supply, the first area where we need to reclaim to become bullish, and we actually fell before we could get there, came down, cleaned up both of these lows here that are on Ethereum, and now we are actually in high time frame demand or a major area of support. So Ethereum pretty much played out as expected. Now we're looking again for a base to form within this area of high time frame demand, and then for a reversal back to the upside. And again, guys, keep in mind, with Bitcoin downside being limited, we expect Ethereum downside to be limited as well. We are now at high time frame area of support, so everything's kind of lining up here with Ethereum along with Bitcoin. So yeah, not much to update here. Previously in my last video, for those who watched it, I talked about this level that I've marked off with this dark green line, and I pretty much said that if we get there, then it's a blind long to the upside with a stop loss below the lows here at 1500. I have not taken that long, and the reason I didn't take it was because I am actually interested in longing another coin. And as a trader, of course, we need to keep risk management in check, and because most of these coins are correlated in terms of movements on these drops, meaning if Bitcoin breaks down from that high time frame level at 66 to 74K, if it loses that level, then it's most likely that most of the coins that I'm watching are going to lose their key levels as well. Ethereum probably in that scenario would go below 1540, which is why it's important that even if 10 of the coins look really, really good, you need to pick and choose which ones you actually want to trade or take positions on, because if they go against you, it's likely that all the positions will go against you at the same time, right? So typically, like when we're actively trading, we say, well, you only want to risk a certain percentage of your capital, right? That might be 1%, that might be 2% of your capital per trade. Now, if you're taking a trade on Ethereum, on XRP, on Litecoin, on CRV, on 10 coins, and you're risking 1% on each, now instead of risking 1% or 2% on a trade, you're technically risking 10% because they're all going to move together. If one gets stopped out, they're all probably going to get stopped out in a market-wide correction like this. And so for that reason, I had to pick and choose between Ethereum or other coins that I wanted to go ahead and attempt to long. And I chose a different coin. And we'll talk about that coin later in this video. That coin is LTC. I've shared charts in it on Twitter, so those who have been following me already know what I'm talking about. We'll cover that later in the video, but that's just me explaining why I didn't blindly long this key level here at 1850. And you can actually see this. It's pretty amazing that how frequently we see price interact so beautifully with these levels, where you can see price kind of chopping around these key levels, because as you can see from this chart, this is the 3-day chart, but you can literally see we're trading at the green line. And you can see that as price dips below the green line, we're seeing buyers buying up Ethereum. There's obviously a key area or key level here. And this is the same level I marked off in my last video when you were trading at probably 2,500 or so. I can't remember exactly where we were, but I basically said key level right here, and look at that interaction that we're seeing here, even on the high time frame charts. I can go down to the lower time frames and you can actually see, again, dips below, bought back up, dips below, bought back up. So very key level here. And where did I get that level from? Once again, as a reminder for those who didn't watch the last YouTube video, this is a high time frame. You can call it a like quarterly level, right? This is a 4-month chart, and you can see the interactions acted as support, broke down, acted as resistance, acted as resistance. For 8 months, it acted as resistance. On the 12th month, or after 8 months, on this next 4-monthly candle, we broke above it, and now we're retesting it as support. So that's where the significance of this level comes from. It's a very high time frame level, which also means that intra-month or intra-candle, we can wick below. What's important is the candle closes. So obviously this 4-monthly candle will close in a month and 20 days. which means by the time that it closes, we could already be back up to 2,700 plus, right? Oftentimes, you can't necessarily wait, especially in these high time ranges, you can't wait for the close to see if we close above or below, because by the time we get that close, if we are bullish, we should be way higher. We should be bouncing off this green level in the next few days or next week or so, and we should be much higher. So if you're waiting for a month and 20 days to see if we close above or below to know if we're maintaining high time frame bullish levels or not, you're probably going to miss the move. So that's why you need to go down to lower time frames and then try and identify a reversal pattern or reversal structure on this lower time frame, knowing or understanding that we are sitting on high time frame support. And if we start seeing bullish structures here, it could be the indication of a reversal pending, right? That's how we kind of approach these things. But in any case, Ethereum has hit my area of interest. Okay, so that's a very key level here. And ideally this holds and we don't go below 1,500. Again, if Bitcoin is close to bottoming, I think that's a very real possibility. Okay, so that's Ethereum. Let's go ahead and go on to the next altcoin. And this next altcoin, guys, is going to be CRV, obviously a fan favorite, one of my favorites as well. Let's go ahead and jump right into it. Again, this is a clip from the last YouTube video just to give you guys a slight review or overview of what we talked about in the last video. Then we'll go back to today's price action, see how things have developed, and take it from there. This area is a monthly demand zone. You can even take it as like a quarterly demand zone, because we do have 1, 2, 3, 4 months of consolidation here before one giant monthly candle that took us from 22 cents up to 75 cents. So this is a very significant area of support. The best chance to buy if we get it. No guarantees that we will. And above that, we have another area which we call a bullish breaker. Essentially, the point of breakdown that preceded the last major flush, once that point of breakdown is reclaimed, as we can see here, then we consider it what we call a breaker, which just means another area of support, of significant support. So there's tons of support between where we are now and any need to be concerned. All right, guys, that was the last video that we talked about CRV on. And again, just kind of zooming out here, we were basically looking for a potential test of monthly demand. We also had this monthly bullish breaker here that I'll outline. And right now, just to make things a little more clear, I'm taking the body of the candle, but you can really take the full, including the wicks as well, right? So we have monthly bullish breaker here, and then we have monthly demand. And as you saw in that video, a test of monthly demand is actually the most logical place for reversal. This is similar to Bitcoin's 66 to 72K region. The only difference is structurally, this is a lot more kind of like sturdy, you can say, because we have a multi-year bottom here that formed. We deviated below it, we reclaimed it, and now we're basically bullishly retesting that area that we deviated below from. So this is actually even more structurally sound than Bitcoin right now, because there's not much lower that we can fall. Obviously, we're so close to zero essentially from the highs. The downside is relatively limited. And on top of that, we're now testing a very significant area of demand like Bitcoin. We identified it as like a weekly level of demand. This is a monthly level, or you can even say, as I mentioned in the video, like a multi-month level, like a 3-month candle of consolidation before that aggressive move to the upside. So again, CRV is basically testing the most logical place for reversal here. Also worth noting that our last monthly close, you can see here that we actually closed inside the bullish breaker, right? So good, we didn't close below it. Ideally, we would have closed above it. We closed inside of it, which is kind of neutral. And when we closed inside of it, I thought, okay, that makes me more convinced that we're probably going to move a little bit lower in the next monthly candle and tag this high time frame area of demand, which we've now done. What we're looking for now at the end of this monthly close in around 20 days is you'd like to see a long wick left here. I'm not sure how low we'll go. We could go a little bit lower depending on if Bitcoin has a little bit more room to fall. We're at 37 cents now. We hit a low of, I think, 34 cents. Maybe we go to 32 cents. Maybe we even tag this even more precise monthly candle before the acceleration. That would be down around 29 cents. Not quite sure how low we're going to go within this high time frame area of demand, but in any case, guys, this would also mean we're very, very close to a bottom. I kind of want to emphasize here again, I had someone else mention on Twitter, I'm holding my CRV and I'll continue holding it unless we move below, I think they said like 29 cents or something. Guys, what I want to kind of emphasize here, because I need to put this into perspective for those that are panicking or struggling here emotionally with this drop. The idea of selling a coin like CRV, or really any coin that you're confident in or that has fundamental backings behind it, the idea of selling it at these levels doesn't make much sense at all any way you look at it, okay? And I'm going to break that down for you right now, okay? What's the absolute maximum that we can go to the downside here on CRV, okay, from current levels? The absolute maximum we can go to is 0 if curve dies. If CRV dies tomorrow, then we go to 0. And that's the worst that can possibly happen. We can't go negative on the coin, right? So assuming that we go to 0, your downside here from current levels is 37 cents, okay? And that assumes that curve dies I don't even know how that would happen, but that assumes that curve dies. The protocol is no longer being used. I mean, it doesn't make any sense, but just for this hypothetical, your downside is capped at 37 cents, okay? Your potential upside, if we don't die, the only other option to us not dying is us going up, okay? So if we don't die and go to zero, then you're looking at prior all-time highs as a conservative target, okay? And again, I've already explained why this is a very logical starting target, but let's just say this is your ending target, up to $7, okay? So you have 37 cents of downside versus $6.65 of upside, okay? So your risk to reward from current levels is 35 cents of potential downside, $6.60 of potential upside. That's about, off the top of my head, about a 1 to 20x or so, if I'm not mistaken, right? So it's almost as if you're taking a trade here. You're betting on price not going to zero. Your invalidation is zero, essentially. And your upside target is the old highs, okay? By that logic, essentially what you have here is you have a 18R trade, meaning for every dollar you're risking here, you stand to make $18, okay? That is why it makes no sense to sell here, okay? Because your downside risk is so limited relative to potential upside. And based on the risk to reward here at 18.3, what that means is, let's just round it off to 20R, okay? If this is a 20R trade, what it means is that if you're going to be paid 20 to 1 if it succeeds, then if you're selling CRV down here at 35 cents, then you are essentially betting that there is less than a 5% chance that we are going to move back to the upside. You're basically betting on the death of CRV here, because if CRV is not going to die, then it can only go so much lower before it bounces back to the upside, right? So if you're selling here, you're essentially betting on CRV dying. And the reality is that if it doesn't die, you stand to make nearly 20 times what you could lose here, okay? So again, all this is to say that it really doesn't make sense to be a seller at these levels, even if you're worried about potential further downside. We're so close to the bottom that if we're not going to die, the only direction we can go is up. And we're actually testing the most logical place for reversal. Also, keep in mind, I understand this drop looks ugly, guys, but keep in mind we had a move from 21 cents up to 71 cents in a month, and then that move continued on to $1.40, okay? In that context, while this drop does look bad, at the end of the day, it is a higher low above the lows at 21 cents, and it is a retracement, a deep one, of the prior move to the upside, but structurally, this is still a higher low, as I explained in my last YouTube video. So I understand it's a brutal pullback, but we had a very aggressive rise. We went up 5x before this pullback. It's only natural, not even 5x, we went up nearly 7x off the lows on this rise. It's only natural that we get a pullback. A pullback is healthy, okay? So that CRV, we're now testing monthly demand. And again, I've been getting people asking me for updates on CRV for the last week, and I mostly ignore it because if you watched my last video, guys, this is exactly the scenario that we talked about. There's nothing to update. We're getting that scenario that we covered over a month ago. And so if I've been ignoring your tweets on Twitter asking me if there's an update on CRV, this is why. Because anyone who's watched the last video understands that there's nothing to be updated. We covered this scenario. It's playing out. This is the most logical place for reversal. This is where we want to be buyers. It's really that simple. There's not much else to it. So let's go ahead and take a quick look at the CRV BTC chart because that does play a role here. And the great thing about this chart, guys, is that we have confluence. Just like we had on the CRV USD chart, we're looking at the same type of structure here. We have a little low time frame range formed. Potential bottom, we cleared these lows with the wick. Then we shot all the way up to the local range highs, rejected, came back down. We're now pulling back into, what can you see, this clear area of local demand. This is the monthly, but this is more clearly visible on the lower time frame, so I'm going to go down to the 2 weekly. So we'll take this candle. This 2 weekly candle that preceded the aggressive move to the upside. So this zone here is, again, just like on the USD pairing, we have that 30 cent region, high time frame demand. This is the equivalent on the Bitcoin pairing, the most logical place for rejection. And you can see that we're approaching it the same way that we're approaching that area on the USD pairing. So again, most likely type of price action to see here is something like this, okay? And that's exactly what we're looking for. So whenever we get confluence of major demand on both USD and Bitcoin pairings, it increases the odds and likelihood that we see a bounce and a potential reversal. So again, I understand it's a deep retracement, but ultimately what we're doing here is putting in a higher low, retesting the key area of demand that we impulsed from, or that we saw a very aggressive move to the upside from, and technically putting in a higher low as long as we don't go below the wicks here. So most logical place again to see reversal. This is kind of, you'll see this recurring theme of not just Bitcoin, but many alts approaching these most logical areas for reversals where it's the wrong time to be panicking. Yet that's mainly what you're seeing on Twitter right now is panic and fear and people thinking that we're now headed, much, much lower when really this is the point where we're approaching the maximum point of opportunity on many of these coins. So that's CRV, guys. Let's go ahead on to the next coin. The next coin that we're going to go over is XRP. Again, this is a clip from my last YouTube video that was recorded about a month ago. Let's go ahead and take a look. So then I went ahead and shared this lower time frame chart talking about, once again, the same exact thing, that same exact approach that we've had with the other coins that I've talked about in this video. We have the point of breakdown or the area of local supply. Until we get back above this, we cannot rule out another move back down to the lows. And so I shared this chart saying, no guarantees we'll get it, of course, but I'll be interested in a long on XRP on a sweep of our local lows into this next cluster of demand. More on this in my next YouTube video, which is the one that we're now talking about. But yeah, this is basically the way that I was viewing XRP. And if we were to get a move down into the green zone, it'd be very healthy, just a sweep of these lows. Once again, looking for a triple tap, a low to form, then a higher low, and then continuation and a breakout. Of course, if we get back above local supply, that's obviously very bullish, and that means that we may not get this opportunity. But this is nothing to be bearish or concerned about. Again, this is very healthy. It just means that the most aggressive move of the correction is over, and now we're just basing out or kind of like wrapping up this accumulation before the next major leg to the upside starts. All right, guys, so that was XRP, and here's the XRP chart today, and you can once again see that we rejected at local supply, just as I mentioned in that video, and we have now come back down. We haven't quite hit the lows at 176 yet, and we haven't quite reached high time frame demand just below that at 160, but these are still areas of interest. And again, just like Bitcoin, XRP also looks like it may be approaching area where, again, maximum risk to reward for potential buys is approaching, and we patiently waited. We didn't get bullish at local supply like many did, and instead we patiently waited to see if we can get a potential long filled here at this region. So once again, XRP is approaching that area of interest. Once again, just like you saw in the last video, we weren't concerned about a move down to here at the highs here at 275. We're not going to magically turn ultra bearish here now that we've gotten the move that we were simply expecting. There's no reason to do that. This is a healthy correction at the downside, nothing to be concerned about, even if we manage to push into the green zone here, which is again similar to the 66 to 74K level on Bitcoin, similar to the 30-cent level on CRV. This is the area which is the best area for potential reversal back to the upside. Once again, we're looking for ideally some sort of a clear bottom to form here, some sort of a bottoming structure, something like that ideally. We could also just form a power of 3, which basically means we have consolidation. We see a move back below these lows, and then we rip back to the upside. Something of that nature. Doesn't have to be those two particular scenarios. That's just something that I see a lot. In any case, guys, XRP also approaching an area where I would be interested in potentially longing down here. Nothing thus far to be concerned about despite this, what seems to be an aggressive drop, but really is just still chopping within this range after putting in our key low here on the 3rd of February and putting in a local high here on the 4th of February. We're just kind of still chopping within that range, and this is all generally very healthy price action. Now, again, I've been covering XRP in a little bit more depth because I've been actively trading it. We talked about the XRP Ethereum chart on Twitter quite a bit lately, and so let's go ahead and take a quick look at that chart here. And again, I had tweets on Twitter talking about when we were trading below. At one point, I was looking for a move down to the range lows, but instead we bounced off of local demand here, and then we started grinding back to the upside. At this level, I said it looks like we're probably going to break back through here, and if we do, we're targeting the black line above. You can see we wicked all the way up there in a couple of 4-hourly candles, rejected as expected, and now we've basically retested this prior area of resistance and it's flipped to support. And I mentioned in one of my recent Twitter posts that as long as this level is held, that's very bullish for XRP, okay? If this level is lost, we can then see a much more significant drawdown on this chart down to the green zone down here, which would be quite significant because that would be a 30% drop to the downside. But as long as this level is held, we could see continuation back to the upside here on the XRP Ethereum chart, which just means strength on XRP USD as well. So thus far, we are holding that level, guys. Other than that, focus back on the XRP USD chart. What we're seeing here on the XRP USD chart is really not a cause for concern. The only reason I'm paying attention to it is because I'm eyeing up an opportunity to potentially enter another position if we get this area here in green. Other than that, simply looking for bottoming formations like I am on all the other coins. And what we have here, in my opinion, is very healthy in terms of a pullback thus far. So let's go ahead now, guys, and move on to the next coin of interest. All right, guys, and that next coin is HBAR. So let's go ahead and take a look at HBAR again. This is a clip from the last video. Then we'll go into how we are looking today. I haven't had much to say on this one for the last few weeks because there hasn't been much to update on it. And I've had people constantly tagging me and asking me to make updates on it, but there's nothing to update. So Previously, I said that, obviously there's one level that we're looking at here, mainly on both the USD and the Bitcoin pairings, and that's this monthly flip to supply level. You can see we closed the monthly above it, so now it's technically acting as support. And I talked about in my last video update how this is great to see. The problem really with HBAR was that the Bitcoin pairing doesn't look as great. And that's because on the Bitcoin pairing, we are actually rejecting against that same monthly supply zone, which is visible here. It's also the midpoint of this much larger macro range on HBAR, similar to the macro range that we have on CRV. And so once again, just like CRV probably a step or two ahead, I pointed out in that same video that I last made when I talked about HBAR that we could certainly see a revisit to the range lows where we'd have essentially the optimal place to consider a long on HBAR. Because if the Bitcoin pairing bleeds down to this region here, that means that this could be again setting up for a triple tap, and then we're looking for a move to the range highs. Now, what this means, though, on the other hand, is that if we can't get above this red zone here, then HBAR against USD likely underperforms against Bitcoin until we reach this level here, which is 60% lower. Okay, now this doesn't necessarily mean that HBAR will bleed against the US dollar pairing, because again, if Bitcoin is pumping, then Bitcoin could technically pump 40 to 50% and HBAR could kind of consolidate here. And that would be enough to send HBAR Bitcoin down to that area of interest that we had. So this isn't to say that I'm necessarily bearish on the USD pairing. I just think it's not quite ready for that aggressive expansion that we're looking for. So again, you can see these levels are respected so well on these charts. This is why we use TA, because we can spot ideal levels to enter. For example, you could have had bids resting here at 19 cents on HBAR and you would have gotten filled and you'd be up some 25-30% already. But the point is that HBAR could technically, like, you look at this aggressive expansion again, we could technically just come down. Let's go to the higher time frames here and see if we can identify like an area of interest. So this is the 4 monthly chart. And again, all I'm doing here, guys, I'm going to different time frames to see where price spent the most time, right, within larger structures. And you can visibly see that easier when you change the time frames to higher time frames. You can see within this giant high time frame structure, price spent, in this case 12 months in this region down here. Really, this entire region, this entire cluster, the apex of this consolidation, is a massive area of demand. You can see different areas on different time frames, but for example, I would view this as, if you can buy HBAR at 12 cents and below, an incredible buy at this stage, because you have what is essentially like a multi-year tightening consolidation, and then you have a massive monthly candle that expanded out of this consolidation, right? And so any retraces back to the apex or the point of control or whatever you want to call it within this consolidation is then a buy. So you can view that as anything at 12 cents. But again, we don't know how deep this is going to retrace. And so a better gauge of when it might be a good time to buy HBAR against the US dollar would be to look at the Bitcoin pairing. You can also see that, this is our larger time frame zone, but we also have like a lower time frame cluster right here before this expansion. We almost tagged that, right? So you can set bids at 18 cents and below into the orange zone to try and catch any more dips that we may have on HBAR. But again, we don't know how deep this is going to go, because partially it depends on how deep Bitcoin pulls back. What's a better gauge, I think, is by looking at the HBAR Bitcoin pairing. Whatever price HBAR is at, if and when we get to this green zone, that's a buy. That's kind of the way that I'd approach this, right? Because there's a decent chance that when HBAR Bitcoin hits this area here, we're at the point of kind of like maximum risk to reward on HBAR longs when we enter this green zone, if we do, right? There's a chance that we don't get this low. Maybe we only stop at this cluster of consolidation. But again, with the expectation that Bitcoin may be going parabolic soon, it makes sense to see a bleed on altcoin Bitcoin pairings that are not yet ready for those moves as they consolidate to ultimately follow Bitcoin. But that consolidation on their USD pairings while Bitcoin is pumping could lead to these types of bleeds. And this is where we look for those max risk reward opportunities on altcoins. So if we get this, it's a screaming buy wherever HBAR is against the dollar if we manage to get to the zone. And so this is exactly kind of like the same update I talked about in my last YouTube video on HBAR. There really has not been any change to that. There's been nothing to update because we haven't been able to clear the Bitcoin pairing resistance. And until we manage to clear that, expect HBAR to kind of consolidate or maybe bleed a little bit until we're ready. All right, guys, so that was HBAR. And we can see here in today's price action that we haven't done too much since making that video. We've kind of chopped around. We kind of bled back down to that wick that we put in. We kind of chopped around there, and we're hovering above that first area of interest that I marked off. Again, the orange zone, I said monthly in the video, but this is actually a 4 monthly candle. So we spent 4 months consolidating here before we actually broke to the upside. And so this, again, orange zone is the best risk reward area for longs on HBAR. And right now we still have a ways to fall to get there. We're finding some support here on the green zone, but you'll see that we're testing this smaller green area now for the first, second, third time. And oftentimes the more these levels get tested, the more likely they are to then fail. So once this lower time frame level fails, we would then look for a wick into the ultimate buy zone, which is the orange zone here. So that starts at around 12 to 13 cents, okay? So again, HBAR, not too much to update here. Let's take a look at the HBAR Bitcoin pairing. We talked about the key level on that chart. Let's see how we're looking there. You can see here that we still have a ways to go before we make our way there, and we're still struggling to get past this monthly area of resistance. So again, just like I said in my last video, I don't think HBAR is ready to take off anytime soon. I think we're going to have some more time just kind of consolidating / bleeding to the downside. This also tells me that unless we manage to clear the red zone, this tells me that assuming Bitcoin's also at a local bottom here or approaching a local bottom, it's likely that HBAR kind of bleeds a little bit lower as Bitcoin consolidates or pumps to the upside. So ultimately that means that Bitcoin probably shows more strength here in the coming weeks than HBAR does. And that will change, of course, if we manage to break above the red zone. But until then, I'm still looking for a potential drawdown to this zone here. And that would be an incredible buy opportunity if we get it. Of course, there's no guarantees in this game. We just look at probabilities and possibilities, but that would be a fantastic opportunity if we get it. So that was HBAR, guys. And that sums up our typical coins that we normally talk about. Those are all the coins that I covered in my last YouTube video that was made about a month ago, which now means that we're going to jump into this section where we're going to talk about coins that you guys voted for. So the next 10 minutes, I'm going to talk about 10 coins. The goal is to talk about each coin in under a minute. So it's kind of like rapid fire, 10 coins, 10 minutes max. This is probably going to take even less time than that. Let's go ahead and jump right into them, guys. The first coin that we're going to talk about, and let me preface this, is the perfect time to say this, that none of these coins were chosen by me. None of these coins are coins that I personally necessarily hold or am invested in. A lot of these coins, I've never looked at the charts before. And again, this is totally based on my audience's votes. And if this goes well, then we'll do this in the future. And if you guys have a coin that you'd like to see me take a look at, make sure to vote on the polls that I post. And so again, none of these coins that I'm talking about here, these next 10 coins, are endorsements of any of these coins. Normally I talk about coins that I like or am personally holding or invested in. The next 10 coins, that's not the case. Even if I hate the coin, I'm going to be talking about it because it's not my choice, it's my audience's choice. So just prefacing that, because the first coin that we're going to talk about is a coin that I would probably never ever cover myself. It is a meme coin called FARTBOY, and I don't know how it managed to get... I mean, the community is clearly very strong because I think I had 1,700 votes submitted in 48 hours. And of those 1,700, about 300 of them were for this token. So good job for the community for making their voices heard. And let's go ahead and jump right into it, guys. This is a meme coin. It's at 65 million market cap. Again, I don't know anything about it, but very clear area of demand here where it should hold if it's bullish. Okay, so this is the right time to be a buyer if you're interested in buying. I'm obviously not. But this is the area of interest where most likely to see a potential reversal. Also keep in mind that almost every coin in this entire space at some point or another is going to have a 90+% drawdown, okay? Bitcoin has done it 4 or 5 times. Every coin is going to do it at some point in time. Thus far, FARTBOY has not seen a 90% drawdown. And anytime I see a new meme coin like this that has launched and has pumped like crazy and then is starting to see drawdown and we're not yet at 80 to 90%, I'm very weary. So again, this could certainly fall lower. Again, like I said, a lot of these coins at some point in their life will have 90+% drawdowns. And again, if they're meme coins, with very few exceptions, a lot of them don't get past this first major pump and they kind of bleed endlessly. So just keep that in mind. Again, I know nothing about this particular coin, but there is FARTBOY in under a minute. Now moving on to the next coin, we have TELCOIN. Now, TELCOIN is one that I've actually looked at a few times myself. It is I think what some would probably consider a dino coin, but I've paid attention to it because once upon a time I had marked off a key area of interest where I wanted to buy it, and we never got that area of interest. Okay, that being said, what I can see right off the bat is we have a potential bottom formed here. You can actually see the very clean triple tap, the thing that I talk about on other charts that we look for. Okay, very clean. We have one tap, lower low, reclaim higher low, and then move to the range highs. Range highs have now been taken, okay, which is a good target to the upside, and now we're pulling back, okay? On TELCOIN, I wanted to see for potential blind buy, just based off of key levels or risk to reward, this green zone here down at 0.00055, okay? TELCOIN made a base above that, about 2x higher than that, made a base, and then moved to the local range highs and took the highs. But at this point, the same way that we saw a deviation at the range lows, this could very well be a deviation at the range highs before a continued bleed, okay? I don't know if this is going to happen. I would not necessarily short this, but I'm telling you now that if we get something like this, I may actually be a buyer once again in the green zone here if we get it, okay? All right, guys, ONDO is the next coin. Again, I don't know anything about this one either, but let's go ahead and take a look. So here's ONDO. Looks decent. Let's actually go to the higher time frames for a bit more clarity. So here's the monthly chart. You can see here, clear area of demand. You can see after this clear area of demand, we erupted on the monthly and made new all-time highs. So this area is pretty significant. Let's go ahead to the 3 weekly. So very key candle here, right? We know this is already a clear area of demand, a monthly area of demand, but we can see this 3 weekly candle with this giant wick and then price catapulted to the upside. We want to see this level hold, okay? As long as this level holds, we are at the point of kind of maximum opportunity here for ONDO. But the worry and the concern is that if this area is lost, we probably come down to sweep these built up lows, and that would be a decent drop to the downside. And what's more concerning then is below this area of demand that led to the new all-time highs, we don't have any very clear levels of demand or major areas of support. Instead, we have a bunch of built up lows. This is not ideal if we lose the green zone. If we lose the green zone, then the next area of interest where I would be a buyer personally will be down here at around 33 cents, okay? And once again, let's see how much drawdown we've seen from the highs. 65%. Again, like I said, almost every coin in this space at some point in time is going to see an 80 to 90% drawdown. If your coin is falling and has not yet seen an 80 to 90% drawdown off the highs, then there's a good chance that we could go deeper than you think. Again, this drawdown was about 66%. The current drawdown is about 66%. If we make it down to the green zone, boom, we have 85% drawdown. That tells me that this is a very logical place to be eyeing up. So again, ONDO, if I'm holding already, you don't want to be selling here because this is the most logical place to see reversal. But if we do lose this level, then eyes on the 30-cent range for a buyer to step in, right? All right, guys, next coin is Cardano. And this one I know is a popular one because they have a very strong community on Twitter. Let's take a look at Cardano. This is a coin that I don't personally hold any of it. I've never held any, and I'm not particularly a big fan of it. I've traded this in the past. I remember actively trading it years ago, but we had a very clear structure on some big breakout, and I remember we were able to identify it. So I'm a little bit familiar with the chart. The thing that really impressed me about Cardano, which I think is kind of a blueprint for what a lot of alts are going to do here in the coming months, and kind of something that everyone should be paying attention to. Cardano in 2017, in the 2017 cycle that ended at the end of 2017, hit a high of $1.30, okay? From there, we fell down to as low as sub 2 pennies. We went from $1.30 to under 2 cents, almost to zero, 97% drawdown. From a penny and a half, we went to $3.10 for a 300x after almost dying. And this is kind of what I mean by if we're not going to die, we're going to go up, right? There's only two options here. The coin's going to go to zero or it's going to recover when market conditions turn more favorable. And so again, just like we're looking at CRV here, if you're down here 95% drawdown, there's no reason to be selling here, especially with a coin like CRV that has fundamentals backing it. Again, I don't know much about Cardano, so I can't speak for Cardano itself, but this is just a perfect example of why you should not be panicking when we're this close to the bottom, because the risk to reward is so much in favor of moves to the upside. Imagine you have $1,000 of Cardano down here at 4 cents and you panic sold because you thought we're not stopping the bleeding. Or actually, let me make it a little bit more relevant. CRV is currently down from the highs of $6, at least 90% from the highs. On Cardano, the equivalent, that would have been like 10 cents, okay? Imagine selling at 10 cents. You had $1,000 at 10 cents. You sold at 10 cents because you didn't want to lose your $1,000. That $1,000, if you had simply held and not sold, instead of losing $1,000, that would have been worth $30,000 at the highs. So imagine panic selling here to save your $1,000 and essentially throwing away a lotto ticket for a 30x to turn your 1,000 into 30,000. At these levels, when you're this down, when the coin's this low, it doesn't make sense to sell unless you think we're actually going to zero. And even if you actually think we're going to zero, if there's even a 10% chance that we're not going to go to zero, then you're better off just holding in case something like this happens, because that $1,000 that you saved or that you sold thinking you're saving could have ultimately become something like 20 or 30,000 down the road. So anyways, that's a great little tangent there on Cardano. This one's taking a little bit more than a minute, but yeah, Cardano also approaching, as you can see here, key area. You can probably mark this off as like a massive high time frame zone. Let's go ahead and take a look. So Cardano, I think, can probably go a bit lower. You can see here that we really tightened up here down lower. We actually tagged this region, this cluster here, but we really tightened up down here at around 50 cents and below, so 25 to 50 cents. So, and you can see these big rejection wicks on the higher time frames as well. I think that it's certainly possible that Cardano comes down maybe to take these wick lows and then again push deeper into this area of high time frame demand or support and then see reversal to the upside. Let me go down to lower time frames real quick and take a look. Yeah, I mean, it makes sense. It makes sense. It looks like a lot of other coins where they're pretty close to where I'd say a potential bottom is coming in, but they could still fall a bit further. So for Cardano, I really like a potential wick below 50 cents into this cluster of high time frame demand. And then we look for a bottoming structure there for a potential reversal back to the upside. So that's Cardano. Let's go on to the next coin. All right, the next coin is Velo. So let's talk about Velodrome, guys. Once again, this is a coin that I think I'm going to need to find more price history on because Coinbase doesn't seem to have enough. Yeah, not much to really work with here, guys. This just looks like chop. We could have had like a potential impulsive move off of these lows, 1, 2, 3, 4, 5. But as you can see, we've almost fully retraced that entire impulse. This entire chart just looks like one giant range to me. I'm not really seeing much that there is to like be bullish about here or to work with. Again, I don't know anything about the fundamentals behind this token, but for all intents and purposes, this is a chart where I don't have much to work with. This is a chart where the old high was at 45 cents. We're now at 4 cents. So this is a 90% drawdown. So that meets the qualifications that we talked about earlier. But in terms of structure, I'm not seeing much here. This is the type of coin where if I was bullish on the fundamentals, I would buy it. And that's about it. I'm not seeing anything technical. I would buy it for like a long-term hold. Or I'd buy it if I think that we're still in a bull market and that the market's going to rise and that this is a pullback for buying on Bitcoin. If I was bullish on Bitcoin here and I was bullish on Velodrome from a fundamental perspective, then this would be kind of like a buy and forget type of purchase. But I'm not seeing anything here in terms of technicals that suggests a reversal is imminent. I'm not seeing anything here in terms of technicals that tells me that we're approaching a very big area of support. Of course, the lowest we can go is 0. So again, this is a coin that I would simply buy if I was bullish on fundamentally, but if I'm a trader, I'm waiting for something more to show up. I'm waiting for something more to confirm a reversal. I'm waiting for some sort of a setup, maybe a wick below, 4 cents and then some strength to come in. But yeah, this is one of the strangest looking charts I've seen so far. Let's go on to the next one. All right, guys, the next coin is Link, and this is one that I've been tracking personally because I've been wanting to position on it, but I haven't had a chance yet because I've been distracted by LITECOIN, which we'll talk about later in this video. That's one of the coins that I've been very interested in buying on this dip. Link is basically hit where I would be buying if I was looking to buy. Like if I'm buying spot here, I'm buying it at 12.59, this green zone that I'd marked off. And the logic behind this is that Link already had an impulse. I mean, a massive range here, deviated below the ranges. This is giant accumulation zone, basically. Then we saw an impulsive move to the upside. Then we saw a correction back down to the range lows. Perfect triple tap here. One, this was like more of like a deviation, but then we got the third tap here, and then we moved up. Again, we moved up in like a corrective manner, took the range highs, came back down to these range lows, and so now we have once again another area of like deviation that we're now testing. You can kind of view this kind of like a little fractal, right? This giant range deviated below for some time, recovered, reclaimed, and then pumped. And again, we have a little range here, deviated below for some time, recovered, pumped, and now we're retesting. So the same way we had a large triple tap here, you can argue we have a small triple tap here. And so this looks really good. If I was bullish on Link, I'd be buying spot here. There's a chance that we can come back down to these range lows. Like I can't completely rule that out, but I would just dollar cost average on Link between $6 and 12. I do think that we're headed to 52 plus on Link. So for me, this is not a bad place to be a buyer. Again, if I was looking to buy, I would be buying some Link here, and then I would save a little bit of cash aside in case we get further drawdown to the $8 level to buy the rest. But that's Link for you. Looks really healthy overall. I like the way it looks. Let's go on to the next coin. All right, guys, the next coin is Tau. This is another coin that I have not looked at before. Tau doesn't look great just off this initial view because what we have here is obviously a key level because it's been tested 1, 2, 3, 4, and now 5 times. And we talked about how key levels, when they're tested many times, tend to break because there's only so many buyers at this price level. These buyers got a chance to buy in January of 2024. They got a chance to buy again in July of 2024. They got a chance to buy in August of 2024. They got a chance to buy in September of 2024. And now they're getting another chance to buy here in March of 2025. At some point, the people that are interested in buying at this level are going to run out, and then price will fall back below here. And so for now, Tau doesn't look fantastic to me. What I am looking at is I'm looking at this area because it is, again, this high time frame area of demand before the giant rip to the upside from $45 up to $400. So we went a 10x after consolidating here for some weeks, it looks like. For me, I would be a buyer on Tau. Again, I don't know anything about it, but if I was just a blind buy or blind bid, it'd be down here just under $100. We're at 229 right now after seeing a high of $800. So I know it seems like a big fall from here, but that's just $100 more after we've already fallen 500 from the highs. And again, if we look at our percentage of drawdown from the highs, We are at 79, so we still haven't hit that 80 to 90%. So again, I think there's a decent chance that we could get something like that. But yeah, if you're bullish, then you're hoping that this level holds for the 5th time, which is often not the case, unless we get like we have on Ethereum right now, where you have like a clear level and then we actually break below it, consolidate, and then reclaim it. At that point, we can test it again, and it doesn't matter how many times we test, because at that point you're now forming a triple tap, or again, you have that deviation or fake out, and so now buyers are expected to step back in. But when you don't have that sort of clear breakdown, fake out, reclaim, then this sort of repeated tap after tap after tap, that usually doesn't sustain, and it usually ends up in a breakdown. And then once we get that breakdown, of course, 2 things can happen at that point. We melt down to the next major area of support, or we get that scenario where we break down, fake out, and then reverse, reclaim, and then send, right? So in any case, this is not a place where I'd personally be bidding because we've already tested it 4 times. I would wait to see a breakdown. Ideally, I'd bid in the green zone here, or if we break down, trade below, and then reclaim, I would then look to bid the zone once again. So that is TAL. Let's go on to the next coin. All right, guys, the next coin is SWI, and let's go ahead and take a look. This is a coin that I know has been doing very well over the last few months. I don't know anything about this coin as well, so keep that in mind. But let's go ahead and right off the bat see how much drawdown we got off of this local high to the last local low. 78%, so still not quite that 80 to 90%. We have what looks like a pretty clean, impulsive looking move off of the lows here at 47 cents. That took us all the way to $5. Let's go ahead and look at high time frames real quick. So we didn't have any bearish divergences in the 3 weekly. We had a bearish divergence here on the weekly chart, as you guys can see. And then we got our breakdown from there. We are now testing what you'd consider kind of like a high time frame area of support. You can once again see this 2 weekly chart, 2 weekly candle before that move from $1.95 to $5. So pretty significant move there. And we are now testing that zone for the first time. So SWI doesn't look all that bad to me. Okay, keeping this in mind, we want to hold this level here that we're now testing. If we lose this level, things could get a little bit ugly with a move down to around $1. The next area of interest would be down here. So we have a little gap here in inefficiency. So we really want to hold, if you're holding SWI, you really want it to hold here, because if we don't hold here, we could see drawdown to about $1 and some change. Almost gives it that 80 to 90% drawdown that we like to see. So yeah, SWI looks all right as long as it holds here, and as long as it does hold here, then there's a chance that we could go for new all-time highs. Lose 215, we're looking at around $1. Let's go on to the next coin. LITECOIN is one that I've been sharing charts on because I've been looking to get a fill here. LITECOIN, I think, looks pretty damn good. I talked about LITECOIN when it was down here at $40. I said that it's likely that we're seeing our bottom. The reason for that was based on RSI and some other factors, which I'm not going to get into right now because we have under a minute for this update. But I've been looking for a move on LITECOIN down into this area of demand, where we consolidated for a long time before ripping to the upside. We have a key area of supply, or you can say resistance, in the red zone above. This is a 3 weekly chart, and I think it was a 3 weekly or monthly resistance, a monthly resistance. Monthly resistance zone here at about 178 to 300. This is the last area of resistance, significant area of resistance, but the last area of resistance before we make new all-time highs on LITECOIN. I do think that we're going to reject here initially. And so my goal was, LITECOIN had been showing a lot of strength prior to the market-wide pullback. If you look at Twitter maybe a month ago, you would have seen a bunch of people talking about how LITECOIN is pumping when nothing else was, while LITECOIN is showing a lot of strength when nothing else was. And so a lot of people were talking about jumping into LITECOIN here above 100. And I said, I'm going to wait to see if we get sub $80. If we do, I'll be a buyer. If not, I'll look for something else, because I knew that we were approaching a key area of resistance just at 181. And I knew that there was a chance that we could see a rejection in the market and a pullback below this wick, or below this wick at $80. And so I posted a chart on Twitter saying that if we get a move back down to sub 80, I'll be a buyer. And I've been hoping for that, and it looks like we're about to get that. And so hopefully we do get that. I'm interested in LITECOIN just under $80, and then I'll be targeting it for a move to 185. So that is LITECOIN, guys. Looking really good overall. I'd also like to cover LITECOIN Bitcoin because there's some confluence there that I want to show you guys. Again, we know that LITECOIN looks to be approaching a potential area of demand and support. If I go to the LITECOIN Bitcoin chart here, you can see here as well that we're also approaching a key area of demand. You can see this giant wick on the LITECOIN Bitcoin chart, cleared this wick right here, shot back up, and we're now retesting it. And then again, next major area of resistance on this LITECOIN Bitcoin chart would be this level here, which from the current zone is a 60% move to the upside, right? But yeah, LITECOIN Bitcoin also in an area of support. I love to see confluence between both Bitcoin and USD pairings. That gives me even more confidence in potential longs or shorts if they're both confluent on the supply side, but in this case, they're both confluent on the support side. So yeah, this LITECOIN chart looks great, and I'm hoping that we can get filled just under $80 on LITECOIN. Let's go on to the next coin. All right, guys, the next coin is DAG, another coin that I really don't know much about, but let's go ahead and take a look at the chart. It's called Constellation. Let's go zoom out a little bit. Interesting chart. I'm gonna take it off log scale just to get a better view. I'm not too sure what to make of it, to be honest. We are approaching a key area of demand here. Maybe we can better see it on a higher time frame chart. Beautiful, 3 weekly candle before this move to the upside, strong move to the upside that took us from 2 cents up to 9 cents. So before we made a 4x. So yeah, Constellation holders, DAG holders, you want to see the green zone here hold. As long as the green zone here holds, then this is the most likely place for a full-on reversal and a move back above 10 cents. I actually don't know much about this coin, but I think that this is a reasonable expectation for now. It's also worth noting that on Constellation, on DAG, we do have like this cluster of supply here that preceded the breakdown. We consolidated here for 1, 2, 3, 4 months, and then we broke down and retested it as resistance. But the key being here that it's already been retested. And so again, subsequent tests imply a greater chance of breaking through. So I'm assuming the green zone holds, we're looking for a push back up to the red zone at around 11 cents, which is around a 2 to 3x from current levels. And then at that point, we have to see if we break through or if we consolidate and potentially reject. But I think DAG looks decent here. This is a nice looking structure here with a nice strong candle and now a bullish retest as long as we don't go below 2 cents. I like the way this looks. I think that there's a decent chance we'll hold here as long as Bitcoin doesn't break its own 66 to 74K zone. And if we do hold here, then we can expect to push back up to 11 cents. Guys, that is 10 crypto coins that you guys chose in under 10 minutes. If you guys enjoyed this video, please like, share, and subscribe, guys. If you guys enjoyed this segment at the end, please let me know in the comments and make your voices heard. If you guys do enjoy this type of section at the end of my videos, I'll start including them more often, and we'll do the polls as we do on Twitter to have you guys vote for your favorite coins to be covered. That's it, guys. Again, I appreciate all the support, and I'll catch you guys in the next one.